Good morning, traders, and welcome back to Market Movers. If you were watching the markets today, you know it was all about one thing: the calm before the storm. Tomorrow is US Election Day, and today, Monday, November 3rd, the financial world was holding its breath. We saw markets treading water, desperately looking for direction. But while all eyes are on the polls, the real story might be what's happening behind the scenes. The US government shutdown is still scrambling economic data, and the Federal Reserve just made a surprise move to keep the system calm. We'll break down that Fed injection, why Microsoft hit $4 trillion, and massive crypto news from Hong Kong. Let's get into it. First, a snapshot of the global close. As expected, it was a day of pure caution. In the US, markets finished narrowly mixed as pre-election anxiety kept conviction on the sidelines. The S&P 500 finished just barely in the green, up about 0.1% to close around 6,890. The NASDAQ composite managed a small gain, up 0.3%, closing at 24,021, mostly held up by a few big-cap tech names. And the Dow Jones was the laggard, basically flat, ticking down just a few points to close at 47,580. Across the Atlantic, Europe was similarly quiet. The FTSE 100 in London was up 0.1%. The DAX in Germany managed a slightly better gain of 0.4%. But overall, trading was thin as investors wait to see what the US decides. And in Asia, we had a split session. Markets in Japan were closed for the Culture Day holiday, so the Nikkei was dark. But the Hang Seng in Hong Kong crept higher, finishing up about 0.5% on some major local news. And I'll have more on that in the Crypto Corner. The takeaway here is simple. This is not a market of conviction. This is a market that is parked, waiting for a catalyst. Now, for our macro deep dive. The two big stories today aren't what the market did, but why it didn't do anything. Story number one, the government shut down data blackout. We are now deep into this ongoing US government shutdown, and the effects are really starting to bite. Today, we were supposed to get the S&P Global Manufacturing PMI data, but like the monthly jobs report last month, it's been delayed indefinitely. This is a huge problem. The market is flying blind. We have no official, reliable data on jobs, on inflation, or on manufacturing output. So what does this mean for the Fed? What does it mean for your portfolio? It means uncertainty is the new high. Investors hate uncertainty more than bad news, which is why you're seeing capital sit on the sidelines. Everyone is waiting for two things: a new Congress and a funded government. Story number two, the pre-election freeze. This is the obvious one. With voters heading to the polls tomorrow, no major fund is going to place a massive bet in either direction. What are they watching for? Control of Congress. The market is generally pricing in a split government, which historically means gridlock, and markets often like gridlock because it means no major, sudden policy changes. A surprise sweep by either party, however, could send shockwaves through specific sectors tomorrow night. A full Democratic sweep could boost green energy and pressure pharma, while a Republican sweep could be a tailwind for traditional energy and financials. Today's flatline action was the market coiling that spring, and it's ready to pop one way or another in the next 48 hours. So, with the market on edge, who stepped in? The Federal Reserve. In a move that caught some traders by surprise, the New York Fed conducted a $29.4 billion repo operation this morning. What does that mean in plain English? It means the Fed saw stress building up in the short-term funding markets, the plumbing of the financial system, and they stepped in to inject liquidity, essentially to make sure the banks have all the cash they need. Why now? Because of the uncertainty cocktail I just mentioned: the election, the shutdown, and the data blackout. The Fed is signaling to the market, we are here, we are watching, and we will not let the system seize up. This was a calming, preventative move. Meanwhile, on the global stage, all eyes are on the upcoming G2 meeting between President Trump and President Xi. Reports are circulating that the two leaders are finally making progress on a new trade framework. This is providing a slight tailwind to multinational stocks and commodity markets. But like everything else, the market is in show me, don't tell me mode. Even on a quiet day, we had some massive individual movers. The big winner, Microsoft. Microsoft was the clear leader in the S&P 500 today, jumping nearly 4% to hit a staggering $4.06 trillion market capitalization. The driver? A new, expanded partnership with OpenAI. The deal reportedly integrates OpenAI's next-gen models even deeper into the entire Windows and Office ecosystem. This AI-fueled optimism continues to be the single biggest driver for big-cap tech, and Microsoft is, for now, the undisputed king. The big loser, Kosmos Energy. On the flip side, we saw Kosmos Energy get hammered, dropping over 8% today. This was a direct result of their Q3 earnings, which they reported this morning. The company posted a net loss of $124 million, which was far wider than analysts expected, citing lower than forecast production volumes. This is a painful reminder that in the energy sector, operational execution is everything. All right, let's check in on the digital world. Bitcoin is currently trading sideways, holding strong at around $107,200. Ethereum is also quiet, hovering right around that key $3,715 level. But the price action isn't the story. The real news, and the reason the Hang Seng was up today, came out of Hong Kong. The Hong Kong Securities and Futures Commission, the SFC, officially announced this morning that it will allow licensed crypto exchanges to access global liquidity pools and share order books. This is a game changer. Until now, Hong Kong's crypto regime was very isolated. This move signals that Hong Kong is not just open for business, but that it wants to be the central hub for all of Asia's crypto trading. It means more liquidity, better price discovery, and a massive, bullish regulatory green light from a major global financial center. This is one to watch. Looking ahead to Tuesday, November 4th, the U.S. Election Day results will dominate market focus. Expect increased volatility as exit polls emerge. Economic data and earnings take a back seat. What was your biggest takeaway from today's quiet session? And what's your boldest prediction for how the market will react to the election results? Let me know in the comments below. And as always, if you got value from this video, hit that like and subscribe button so you never miss a move. I'll see you back here, bright and early, to break down all the election fallout.